right, so welcome to Game Plan Sunday. Today is December 19, 2021. As we head into the holiday week, it's going to be a short week this week as the markets will be closed on Friday. And a lot of participants are out on vacation and things like that. So we're not expecting much volume this week. However, there's always opportunities every day in the market. So in case you're participating, you definitely want to keep your heads up and your ears open for what's coming down the pipeline. But just to take a look at what occurred over the past week, the leaders for last week as far as the sectors go was gold. Gold led the way at 0.87%, slight gain there. And then the dollar also with a nice little uplift at 0.65%. And then in the red was everything else. We had the Dow Jones negative 1.68%, the Russell 2000 down negative 1.71%, the S&P 500 was down negative 1.94%, Bitcoin down negative 1.99%, oil was down negative 2.53%, and the NASDAQ was down as the biggest loser of the week, negative 2.95%. Moving along to the sectors, we had the healthcare sector leading the way at 2.48%. Real estate was up 1.75%. Consumer staples was up 1.36%. And utilities was up 1.24%. Everything else was in red, starting with communications at negative 0.29%. Materials negative 0.72%. Financials down negative 1.18%. Industrials was down negative 2.76%. The technology sector was down negative 4%. The consumer discretionary was down negative 4.73%. And then energy was down negative 5.01%. So you guys get an idea that it was a pretty red week if you were participating in the markets. Now, to kick the week off, everybody was anticipating the FOMC meeting from the Fed. So that was really what, led the downturn in the markets over the past week, which is really interesting because the markets are so confused and wishy-washy in what they want to believe. And so that's why you get all this volatility. All right. Volatility doesn't tell you if it's going to go up or down. It's just wild movements, wild swings. So you can see in the VIX indicator, which we can go over that later, where you can see, the VIX is starting to come back up into its higher territories. And the market's just, was trying to digest, this decision from the Fed. So in the FOMC meeting, basically the Federal Reserve laid out a hawkish plan on inflation. Now, hawkish means that, they're removing the punch bowl from the party. Okay, so the participants in the party should be upset. Okay, you think they would be upset? What's interesting, we saw some crazy moves where the markets didn't move until later. Okay, the day of, everything was like, all calm and collective, and everybody's trying to figure out, I guess the market's accepting that. But it don't actually make any sense. We talked about this in the chat room. For those who was in the chat room, we were talking about it in here. And, I'm observing the markets and I'm like, why is the markets, rallying? This don't even make any sense because the only reason why you up is because the Fed's been pumping cocaine in the markets, right? So they're all, addicts, right? And if you take that away, you're going to get the withdrawals, So if you ever seen the movie New Jack City, you saw how Pookie was when Ice-T, had him in that room trying to get him clean, man. He was tossing and turning. He was sweating. He was angry. It was everything. That's what you should expect from a cocaine crazed market, with all this stimulus. Okay. So for one, the Feds, they pumped the markets up. They pumped up all these assets, creating a whole new asset bubble. And they wanted to create the inflation. They told you this time over time. They wanted to create the inflation. All right. And they did, but they killed it. They overdid it. And so now because they overdid it, now they have to step back, on what they were saying. And, they had to retire the term transitory, which, it was played out. And we saw it from the jump. We already knew from the start. You guys been following the channel, following the Wallstreet Jackboyz, you can go all the way back this whole year and see all the videos where we were calling for inflation and they were denying it. And then they went to transitory. Then they went to whatever terms they want to call it. Either way, Powell was forced to be reckoned with, to hit the markets with the truth finally. And so you guys got to understand the markets is a psychological, phenomena. It's really, have nothing to do with math and numbers. People can pick apart math and numbers all they want. It don't make nothing true. Okay. You have all these data scientists and this, that, and the third. But listen, this is a psychology game. All right. People have confidence or people don't have confidence. And so if people believe, whatever the narrative is, then you can get some movements, and it don't have to be true. But this is what we talk about, with the markets being rational and irrational. Okay, nobody can time the markets because you don't know how the markets are going to behave. The markets can behave rational or irrational, and so anyhow, most of us already knew the Feds were lying anyway, but the markets they want to pick and choose what they believe, and they chose to believe it. And then now at the end of the year, the Feds finally coming in to admit that they were wrong. Okay, and now inflation is not just here, but it's a problem. It's such a problem now that they claim that they're going to fight inflation. And this is the other part of the equation: is that the markets believe what the Fed is saying. Okay, so this is going to be the discussion carrying us into 2022. All right. From that meeting, Powell, what they reveal is that they plan on tapering and also raising interest rates a few times next year, 2023, 2024. I mean, they give you a whole, future years of projections of interest rates. And you would think that the markets would be puking up over this, but they didn't quite puke over. I think it's starting to settle in now as you're starting to see some, the markets are starting to dwindle down ahead of the holidays. But they should have reacted as soon as they heard it. But the question is, do they actually believe the Feds can do this thing that they're talking about? So for one, the whole problem with the inflation, again, inflation itself is an expansion of the money supply. Okay, that's what it is. It's just them expanding the money supply. All right. Because they put all this money in the system, it has to go somewhere, right? You give somebody some money, what are they going to do? They're going to spend it. It doesn't matter. That's just psychology. That's a psychological fact, right? That's people do. They spend money if you give it to them. And that's what's happening, okay? And so with that inflation coming out, and the Feds was chasing these fugazi numbers of trying to get this 2%, and now we're at almost 7%, or probably actually higher than that because the CPI numbers are rigged to produce low inflation numbers. It's more over 10% is where true inflation really is. And so you have to be able to, as an investor, you have to be able to outpace this inflation issue that we have right now. Okay. And so that means that you need to be making over 10%, just to break even. Okay. So you got to be making at least 10% on whatever you invested in to break even, because if not, you're losing to inflation. Okay. So your purchasing power, your dollar is losing a lot of money. I don't know if you guys have been shopping. My family, we have a little tradition that we do. We don't celebrate the paganism stuff in Christmas, but we still get gifts. We have this little thing we call Blessings Month. So, the kids and family, they get gifts all throughout the month. And, the kids, they on board with it, of course, because they get their gifts early, right? They get it all through the month. We spring them like every day or so. And so, and then we just relax and stuff on Christmas, right? But going out shopping, I don't know if you guys have been out there shopping, but it's been interesting seeing, empty shelves. And, it's just interesting just seeing all these empty shelves. Like, they really don't have much of anything that's on these shelves right now. And so the supply chain shortages is another issue. And so, I mean, the Feds and them, they believe that this inflation issue is going to correct itself once supply, corrects itself. And I was listening to Larry Summers over the weekend, and he was saying how the supply issues that they're talking about may correct in certain areas, but then they'll create issues in other areas. And that's the whole problem, right? And so, but, they like to lead with these, bullish cases, overly optimistic cases to hype the market into staying, okay? They want the market to stay in the game and to keep playing the game. So they don't want to scare people out. So they're always going to paint the most positive cases possible. But, Larry Summers was telling me, like, man, listen, this is an issue. You're going to need to, raise these interest rates because inflation is going to cook the economy. So if you got an inflation rate, according to the CPI, 6.8%, then you need to have a weapon that can negate that. The only weapon the Feds has is to raise interest rates. Okay. And so now they're doing quantitative easing because they're, that just means that they're buying assets in the marketplace, creating this, supply demand factors. They're soaking up all the supply, making the prices go up on these treasuries. So they're buying bonds and they're buying mortgage-backed securities. And so you get this crazy cocaine boom in the housing market, right? Housing market is crazy. Price of houses out of this world right now. Although rates are low. You can see the home mortgage rates we got right here, historically low. and that's to sucker people in. But then you have a shortage of supply. All right, so they're creating a shortage, and they have these crazy price hikes in there, and it's giving people this wealth illusion. The people, my house is selling for this, and my house is this, that, and the third. Most people like to brag about the house as it's an asset, and the Feds actually help to inflate it. And so, but the problem is there's lots of dangers in this that nobody's actually really even talking about it. But the inflation issue is this: when people can't buy homes, they had to rent. You always gonna need a place to stay. So those people who otherwise would have been able to buy a home, because prices would have been more stable and everything, they are forced to go into renting. And I don't know if you've seen the price of rents right now. I mean, it's crazy. I'm looking at where I'm at. 3-bedroom townhouses for like $3,500 a month. And this is down south. I'm in Charlotte, North Carolina. So, but that's pretty expensive, And if you can be spending that type of money, you might as well be buying something. You might as well own you something. You know what I'm saying? But people are not able to do so. Now the Feds are talking about raising these interest rates, and they're talking about it. Now, I don't know if they quite can do it though. Okay. And if they can do it, I mean, they may try to juice it up just a little bit, a couple of basis points, but they're not doing anything remotely close to what they need to do to be able to taper inflation. All right. So for one of the things is that their imprint in market is that they've been spending $120 billion a month, right? $80 billion in treasuries, and then the 40 coming from mortgage-backed securities. So when they're talking about taper, what they're saying is that they're going to slow down how much they're buying. All right. They're still pumping the economy. Right. But they're talking about tapering. They're talking about just reducing their imprint. But they're still growing the balance sheet. OK, they're just going to reduce it by, I think it's like 30 billion. They're going to taper off, and then, they're going to keep, slowing it down. And their expectations is, to finish this thing by March of 2022. That's 3 months. So they're talking pretty aggressive here. And then they'll go into talking about, because I don't think they quite can do it, but, they'll go into talking more about raising interest rates, which is problematic because if they were to raise the interest rates, they're going to pop the bubble that they just created. OK, when they, raise these interest rates, it creates all kind of issues throughout the entirety of society. It's crazy. So they're really in the catch-22, position, definitely a position I wouldn't want to be in, most certainly not. But they're going to crash the economy. I mean, we're going to go into another recession. I mean, they basically have no other moves to make. All right. Now, a lot of people are like, oh, they do this all the time. Now, this is different. You got to understand what we're dealing with right now ain't nothing like none of us have ever seen in our life. So you actually have to be a student of history to kind of understand what's taking place. OK, because interest rates are so low at 0%. The Feds have nothing left to do. OK. And what they're going to try to do is going to be the thing that's going to destroy, the economy. But maybe that's what they want to do. I don't know if you read Klaus Schwab's book, The Great Reset, but it seemed like that's kind of what they want to do, to keep the fear going and stuff like that. So anyhow, I find all of this, very interesting, because then you also have this Omicron crap. The news headlines like to keep it out there to keep people scared and fear. I think most people are probably over it by now. I'm seeing no one enforcing these mandates that they're talking about. I've been testing it for the past couple of months, just walking in places, no mask and nothing, to see if somebody gonna say something. Nobody ever says anything. They got signs all over the door. I guess they're saying, hey, according to the state law, we put the signs up, right? We put the signs up, and they ain't gonna stop people from making that, spending money, because that's how they make their money, right? Nobody's bothering you about that nowadays. And so, I mean, whether you believe in the vaccines or not, I mean, even the people that's taking the vaccines are like, yo, bro, like, why do I even need that? I'm vaccinated, right? So even to their defense, why do I even need to put all this mask and all this other crap on, right? Again, like I told you guys before, that don't work. The vax don't work. And the masks don't work either. It's just common sense type stuff. When you really look into it, and you don't need a PhD to figure this out. You can do little experiments yourself to see how the masks work, and you'll figure it out. Just blow a candle. Simple stuff. But anyhow, but they would like to scare everybody, to get people back stuck in the house and try to go back on this lockdown, which is totally unnecessary. And yeah, President Biden's talking about, he don't want to do that, but he's said that on other things, and here we are. He's continuing to move forward with this craziness, failed policy stuff that don't even work. And it's like, for what, bro? Like, you tripping. Anyhow, so coming into the end of the year, focusing on the first quarter of the year, that's where everybody's at right now, is just getting your plans together for how you're going to navigate this cycle here coming into, 2022. So we'll definitely talk more about that, especially, in our next sessions here. But that's something that you guys want to be thinking about. But again, because it's the holiday week, volume is going to be pretty low. And so I think, we'll get some volatility and stuff like that, but I'm not expecting too much of any big moves. Currently, right now, we can see the futures are down right now ahead of, Monday. We can see the S&P 500 is down 35 points. The NASDAQ down 132 points. The Russell's down 40, and the Dow Minis is down negative 267. And gold is actually up 4.2 points. Silver's up slightly. And it's interesting to see gold and silver because silver's like normally leads, gold, and normally moves faster. It was actually lagging, which that's an interesting dynamic there. And we see bonds are actually up as slightly as well. The 30-year and the 10-year slightly up. That means that the yields should be coming down some more. That help people out that's trying to buy homes, which you can see there. Now, the markets is going to be closed on Friday. Just so you know there, Dustin. In fact, we'll go ahead and pull up this preview of this week so you guys can see what's coming down the pipeline here. All right. So this is right here. On Monday, we got some earnings coming from Micron Technology and Nike report quarterly results. Definitely want to see what that's going to look like. I believe Nike's going to pull through, but we'll see. The Conference Board releases its leading economic index for November. Consensus estimate is for 119 reading, which would be 0.6% more than October's level. So the Conference Board currently projects a 5% growth rate for fourth quarter GDP and a slower but still robust 2.6% for 2022. So they're still expecting some growth next year, but they're expecting things to slow down. So you got to understand, if the Feds is talking about, doing what they're talking about doing, that is going to slow the economy. That is going to pop the bubble. Okay. So whatever they're projecting, it better be something slow. Tuesday, got some earnings here, here that I don't really care much about. And that's pretty much it for that. Wednesday, on the 22nd, the NAR reports existing home sales for November. And what else we got? We got some earnings here. And then we have the Bureau of Economic Analysis reports its third and final estimate for third quarter GDP. So they're going to, produce that. Economists forecasting 2.1% seasonally adjusted annual growth rate, unchanged from November 2nd estimate. And again, these numbers, they constantly, do these numbers over and revise them over and over again. So, and then the Conference Board releases its Consumer Confidence Index for December. And expectations are for 110 reading, roughly even with the November data. Index is 15% lower than the post-pandemic peak reached in June of this year, due to concerns about rising prices, to a lesser degree the Rona variants as well. So consumer confidence isn't as strong as it was a year ago. That's what they're saying here. And that's due to inflation and the Rona. So you got these two risk factors here that's weighing on the market. Thursday, we had the Department of Labor reports initial jobless claims for the week ended on December 18. And jobless claims have averaged 225,667 a week in November and December, and have finally reached pre-pandemic levels. So again, this data is just really misleading. And so that's why I don't really talk much about it here with these jobless claims, because they're really misleading. But, the print is what the print is, but it's not really moving the markets much anyway. So it doesn't actually tell the full story. The Census Bureau reports new home sales for November. Consensus estimate is for a seasonal adjusted annual rate of 770,000 new single family houses sold, 25,000 more than in October. So again, more houses being sold. We just talked about, the houses, with the Feds, buying up these mortgage-backed securities, what they're creating these imbalances in the marketplace. The median sales price of a new house sold in October was $407,700. That's the median. That's the average. Okay. While the average sales price was $477,800, both record highs. So we have record high prices of houses, and people are still buying. Okay. Buying. They're buying at the top of the market. And again, when this thing crashed, it is not going to be pretty. The BEA reports personal income and consumption expenditures for November. Economists forecast a 0.6% monthly increase for income and 0.5% for consumption. This compared with gains for 0.5% and 1.3% respectively in October. The Federal Reserve's preferred inflation gauge, the core PCE price index, jumped 4.1% year over year in October, the fastest rate since 1991. Predictions are for it to spike 4.6% in November. So again, you got the PCE, you got the CPI, they got all these numbers that just artificially states, CPI is not the true cost of inflation actually. But again, the PCE, the highest since 1991. You had the CPI, it's the highest in almost 40 years. Again, we're looking at times that none of us were alive, back in the day when these things were at these same kind of levels. And so history is a good teacher, man. That's why I constantly try to put you guys on, that model to learn from history and, watch the movies, films, and documentaries group right here in the group section here. Lots of good stuff in there that's going to help you to start to understand how all of this is working. Friday is 12/24, so the U.S. equity and fixed income markets are closed in observance of Christmas. So there you go, Dust. On Friday, the markets is going to be closed. It's going to be a short week, so all the plays, everybody's going to try to get their money ahead of the holidays. But again, expect low volume because most people is probably on vacation right now, chilling with family, visiting, traveling, what have you. So that's what we have coming down the pipeline for that. We did have, we had, I think, 20 central banks that met over the past week. We had our FOMC meeting. I know we had the European Central Bank. So other countries, they, starting to raise rates in those areas. Turkey, I know Turkey was a big issue. I think we got a little headline print on that. Turkey's lira, their currency is like crashing, which is interesting. Yeah, here you go right here with the FOMC minutes meeting right here. All right. Jay Powell talking about cryptocurrencies risky, not backed by anything. Okay, cool. But you're in a bubble economy. So when you're in a bubble, man, people just buy anything. So it doesn't matter. That money has to go somewhere. And let's see. All right. So I know we had some of that in here. Okay, yeah. So the Bank of England hikes and Fed pivots. The European Central Bank rolls slow as pandemic exit diverges. Okay, so this is an article here that you guys can check out on that. There's another article here on Turkey, halting stock trading as currency disintegrates. Central bank powerless to halt collapse. So this is a currency collapsing in real time, in real life. Yes, you are alive during this, and there's other countries whose currencies have collapsed during our time as well, but this is ongoing right now. So you guys can check it out. And so, I try to put you guys on as much as I possibly can. And it's up to you guys to further, the understanding and the education on all this stuff. I give you guys a couple of good books so you can start to understand this money stuff, right? This book right here by Dr. Murray Rothbard, this guy is a machine. You've ever heard him, talking or debating? This guy is, he's no longer with us, but, he's an Austrian. But what has government done to our money? You want to understand money. This is a short little pocket book. It's real skinny, get this, make sure you add this to your collection so you can actually start to understand this money stuff. I know that I told you guys about Ray Dalio's framework that he's been putting out, this changing world order, just released last month, and I'm still in it right now. I'm going to take my time with it because I'm in my other studies as well. But Ray Dalio, he's done the homework. He's telling you guys, like, you can see some of this stuff. Let me show you that real quick. All right, I don't know if you can see that. It's a little blurry, but he's telling you what's the cycle of this money situation. You go from hard money, you go to these notes, and then you go to fiat money, and then you cycle back to hard money. All right, so after the fiat crashes, they always go back to hard money. All right, they always go back to gold or silver. Always that. It's never a cryptocurrency or digital thing. That's a new phenomenon, if you will, but it's, digital tokens or what have you. But what we know that's a universal truth is that it always go back to a commodity. Okay, so when you understand what is real money, what is money? It's a commodity. Okay, money, it's something that has value before it is used as a money. Okay, and so what's interesting, speaking about this, And Mises, he's the truth, right? This book here, Human Action, make sure you get that. He goes in on it. He teaches you about this whole money stuff. He did this stuff way back in the early 1900s, right? I think this was like 1912 when he wrote this book, The Theory of Money and Credit. Anyhow, to really start to understand all this stuff, this is really convoluted stuff that we're dealing with. Okay, with the financial markets is crazy. It's thin line between, finance and fraud. So, but, really just getting the grasp of it is really interesting. Learning history, learning the economics behind it. It really is insightful. So anyhow, I came across this thing here because, a lot of us think that, stuff like money. Money is like really advanced technology. Money itself was an improvement on barter. Okay, so you understand this whole thing of money is that it was an improvement on barter systems, and it's a social phenomenon. Okay, money itself is like arguably one of the greatest technologies ever created by man when man discovered it. All right, but it's interesting. As I go through my Bible studies, I came across this Genesis chapter 41 about money failing. Okay, now we just talked about Turkey. Their currency's crashing right now, but in this Bible verse here, and you can look at it from a historical point of view. You don't have to be a believer, but if you are, great. But if you're not, if you're just looking at it as a historical event, why are they talking about money failing way back in Genesis? Because money has been a part of advanced civilization since the beginning of time, right? It's not just some new discovery. Money is really important. You guys can check this out, though. I'm not going to read it, but check it out. You see, it's telling you got to do the King James version, because if you don't, you're going to miss what they're saying, right? Because in the other versions, they translate it differently. But the fact that they're actually discussing it, they're saying that money failed. So they had a money system that failed. And money is an indirect exchange. You're just changing something to get something that you want, right? It's more efficient. It's just much better for all, society. But in this case, it was with Joseph. And Joseph was interpreting these dreams for the Pharaoh. He's pretty much acting like as the economist here who's guiding economic policy for the Pharaoh. And basically what he does is he has God give him this vision and that they were, going through this famine and that it was going to last 7 years. And so he started to prepare. And that's what I'm constantly telling you guys every week on the channel, how to prepare for this inflationary crisis that's coming, is that you have to buy hard assets, goods, because that's what you're going to need. You can't eat a Bitcoin, right? That's speculation, okay? You can't have everybody speculating. You can't have everybody in the metaverse. It's not real, okay? Because you need real things to survive. And in this case, you can see what they needed in this time was corn, grain. They needed food. They didn't have no food. And so there was no trade. There was nobody to do trade with. This is how important trade is. There was nobody to do trade with because everybody wanted the same thing. Everybody wanted food. And so anyhow, the money became worthless. Is that the money fell. And so they went to beg Joseph, like, man, we're supposed to die because the money fell. Help us out. And so Joseph, he told him, bring your animals. I'll do some trade with you because, I'm working on behalf of the Pharaoh. But what he did is he bought all the corn. He bought all the land. He bought everything. Pharaoh bought everything ahead because he was thinking what they're getting ready to go through. And then he was thinking about the recovery. All right. And so he positioned himself for all of that. And so if anybody wanted to get, food, they had to do trade with the Pharaoh because he had everything. And they gave him the animals and stuff. So he had all these, these goods that he can make money after the crisis, right? It's crazy. Anyhow, not to talk your head off about it, but it's here, Genesis 47, starting at verse 14. You can go back further if you want to go more into Joseph's story. But this is interesting that even in the Bible, they understood money. And many of us today don't have any idea about money. They don't teach us this stuff in school. But I just find that interesting. I want to share that with you guys so you can check it out in your own time. Definitely. Other than that, let me just jump into a couple of other things here. We had some call buying over in AMC, the stock AMC. And it was interesting because the new Spider-Man movie popped and I saw it. It was great. I give it a 10 out of 10. Make sure you go check it out. Took the family out there. My daughter's home from college. And so she was there. She's boohoo crying like 3 times. I had to, pat her up. You know what I'm saying? That's how good the movie was. It was interesting. It was sold out, though. So the reason I'm bringing it to you is because I normally watch the movies in 4D. And 4D is pretty awesome. But in this particular one, I wasn't able to see it and I normally order my tickets in advance, but evidently I didn't order them in advance enough because I wasn't able to get my 4D seats. So I had to go check it out in standard, which wasn't a bad thing because this place where I go check it out, they got like the best popcorn in the world. Okay. Best popcorn in the world. Cinebar. It was crazy. That's the movie theater. But anyway, they use real butter. So anyway, had a good experience, great experience, good movie, but it's sold out for days. You can't get into it, maybe end of next week, you can get you a seat. But that movie is bringing in a lot of revenue for them. And then a new Matrix movie, and that new Matrix movie is going to be crazy as well. I did a smart thing and order my tickets the night that I was watching Spider-Man, and it's almost sold out. It's probably sold out now. I don't know, but if you ain't got you don't have your tickets, make sure you get your tickets. But anyway, you can see AMC being able to benefit from that Cinemark as well, from these new movies dropping ahead of the holidays. And they got some good movies. We're expecting Matrix to be good. Spider-Man was good as well. So we'll see how that plays out. But again, if you notice this year on red days, the meme stocks are the stocks that actually you get a lot of flow, like GameStop, AMC, BlackBerry companies, just dumb stuff. That just shows you the level of speculation in the market. Just people are just casino gaming this thing. Yet you can jump in and do some quick day trades and stuff like that. So I'll be looking for some of those ideas to play out here this week. We'll see how that plays out. So just put that on your radar. Let's move to the indexes in here. Just taking a look at the Russell 2000. So the Russell 2000, it's traditionally a leading indicator for the rest of the indices. So wherever the Russell goes, the rest normally follows. Okay, Russell's been choppy this whole year, totally indecision. Then we got a nice little rally here that was crushed and then brought it back under its moving averages, and it continues to fall. As we can see, it's continuing to fall here. And so because it is doing that kind of move, my expectation is for the rest of the indices to follow. All right. Now, just take a look at the the S&P 500. All right. And so take a look at the S&P 500. We can see here that that nice looking double top formation here. Let's see here. Or you can call it a triple top, whatever you want to call it. We can clearly see the 1618 on the Fibonacci held. Okay. And so I'm just looking at it like this rejection point here, and it's broken underneath the 61.8%. And it stopped at the 50, but now starting to break the 50 moving average. Okay. So that 50 moving average is a key floor. The next floor support here is going to be this 100 moving average right here. And so it should just continue to fall. Look for that 100 to hold it. It is in a squeeze. So if this thing, shoots south, then I think that we may even, below, beyond that. I don't know. I don't know if that'll happen by the end of the year, because we still got another week here. We got about 2 weeks here, but possibly if that volatility continues. But I'm expecting this thing to continue to go south, basically. I still got that JP Morgan target on here, that 4,400 target, because I want to see how this thing is going to end up. This is their prediction here, and I want to see how they fare with that. And so they're already out of this thing anyway. By the time it hit here, they already exited this trade, but I want to see if the price will come back down. So I have this as an important level, which is close to the 200. Okay, it's close to the 200 moving day average, which is a key support level here as well. So, but again, I'm looking bearish. I'm looking at more of a red holiday. Okay, going into the New Year's may be a little different, but I'm looking a little reddish this week. All right. Then take a look at the NASDAQ. All right, and you can see the same kind of follow through on here as well. This one's interesting looking formation, almost like a head and shoulders, if you will. Shoulder, head, and then this could be a shoulder and like it's breaking. Either way, this thing is breaking. All right, the price is underneath this moving averages. We can see prices changing here. The 100 is the floor. We can see that, the 100 moving average. And then the next zone here will be the 200 moving average here. I still got the 618 off the Fibonacci as a level here, which is, pretty close to that $15,000 target. So either way, I'm looking bearish on this as well, the NASDAQ. All right. Let's take a look at the Dow. Same thing in here. We can see, you can notice all of these had that rip down, and then they got everybody suckered in, getting the last money profits before the holidays, and then bingo, looks like you just get trapped and you get ripped. That's pretty much what's been happening. All right. What it do, Terry? What's good, G? Okay. All right. Yeah, I mean, you guys can drop in the chat any stocks y'all want to look at going into the week as well. We'll take a look at some of those. We got some time here. But I do want to take a look here at the VIX. Let's go with the, which one? Let's go with this one. All right. So these zones in here, they've been here for quite some time. I haven't even changed any of this information on the VIX. I just left it all here, and you can see everything pretty much held through every single time. This this level here, really important. As we can see, it continued to hit that. And then when we got it the last time, it actually pierced through, right? And it chased all the way up to almost that level, and then it came back ripping through back to the moving averages. So again, you guys know my strategy. I use the Fibonacci along with the moving averages as support and resistance. So really great stuff there. But we see it chopping up and down right here. Okay. And if you look at it from this perspective, it's trading above the 200 moving average. Okay. Now, in the times where it's under this 200 moving average, again, you know, the stock market has nice rally, and then it pops up above, you have some issues. So it's still high, it's still elevated, although it's come down from here. Okay. But it's still above all of its moving averages here. Still above its moving averages, 50 to 100 to 200. It's right here up against the mean, which is the 9. You guys can see, the 8 moving average right here. And I have this zone here that's always been here as well. It's a good average point. So it's right here. Question is do we see this continue to rise higher, to test back again, to go higher? I think we will find out this week. Although it's a short week, but I think we'll get some more information on that. But again, this is the VIX, is the fear indicator. And so whenever this thing is up, the markets is down, basically, okay? All right. And we did get a flight into safety. Gold finally got some love here. Gold with some love. All right. Yeah, so gold has gotten a little love here, which it should have got a whole lot of love because this whole inflation situation, you know, the gold bug has been right this whole time. But market participants are still believing the lies that the feds can actually taper and they can raise interest rates. And as long as that's the narrative, I don't think we'll get like a huge spike on gold. I think that, continue to trade, slow. It's going to be a slow grinder. I think we can get, uplifted back to this zone here. I think that's where we're going to try to get to. Okay. We do have a little buy trigger that's in here. Okay. And typically when we get a little buy trigger, things go up, right? Boom, trigger up, boom, trigger slightly up, boom, trigger up, slightly up, boom, trigger. And then you had a nice up. We got a trigger here. And so I'm expecting at least get up here. So I see some positive moves in gold. Okay. It had some positive moves last week. That was good. And let's see, let's take a look at Bitcoin. And Bitcoin is in trouble. All right. Yeah, Bitcoin is in trouble. But again, this is highly speculative. I know there's a lot of religious zealots in this whole thing, but yeah, you have to see how it plays out, right? Bitcoin is trading at 46,000, so under the 50,000. So it's in trouble because it's trading underneath this 50 moving average. All right, that was a key support right there. Once it fell through the 50 hell, boom, 100 broke, and then now the 200 is broke, and so it's trying to stick in this zone here. Okay, so I think maybe it'll try to trade a little sideways if they can, hold this thing here. We will get it to trade sideways up here. But again, it could potentially break even further. Okay, so you're looking at this zone right here. So the next floor levels in here. All right. All of this is good floor zones down here. Should it go lower? That's what you should look for. But yeah, I mean, that's Bitcoin for you. I told you guys, you got to have a good stomach if you want to play that roller coaster. You know, this thing is highly speculative. So, never risk more than you're willing to lose. All right. And so covering all of that, those are pretty much all the major things in here. I do want to take a look at the bond yields real quick. Take a look at the yield curve. All right. So this is the yield curve. We can see the 20 years trading higher than the 30 year. All right. And then we have, 20 years trading higher than the 30 year right here. And then we can see the 7 year and the 10 year starting to flatten as well. So we can see the yield curve is kind of flattening out in here, which is interesting because the bond market's trying to get ahead of all of this, inflation stuff and the Fed's interest rates, rising rates. And then this to give you the spreads between the yields, that view as well. I don't know. Let me see. Did I actually? Okay. Yeah. All right. And so you can see how that's come down a little bit right here. It's still elevated as far as the yields go. So again, we had those floors that came in June, July, June, July timeframe. And so ever since then, yields has been up for those, that's interested in those things here. Still elevated from the June lows, basically. All right. But with bonds looking like they're going to continue to go higher, so we may see yields come down some more. Let me just actually bring that up real quick. Take a look at the bonds. All right. Let's take a look at the 10-year. All right, so then you see the 10-year right here. This thing is kind of looking like an inverse head and shoulders here. We'll see. Yeah, you can see how the 100 moving average is a key resistance level, but then you also got the 200 that's right there as well. It's in a squeeze in here, and it bottomed out right here at this extension, this Fibonacci extension. Okay. And so this could be a shoulder, this could be a head, and this could be another shoulder. And that'd be interesting because then you would expect for this thing to play out like that, if that, comes into fruition. But that bottom was in here. Okay. And we see prices are going up into resistance here. So question is, will the price hold this level or will it get rejected and come back down? So if it does that number, then we'll see yields go up. They'll do the inverse. But if price push through these resistance levels, then we expect those bond yields to drop further. All right, so just keep your eyes out on those. For you real estate guys out there in the market. Yeah, so that is that. What else we need to cover here? Apple, all right. Terry wants to take a look at Apple. Let's take a look at these trades from you guys here, and then we'll call it a night. Call it a night. Okay. All right, so Apple set up. All right, so we did a Fibonacci swing from this high to this low. We had extensions here, and then we did a projection from, I believe it's from this low to this high to here, and projected this 100% level. And the price actually behaved towards this level. We respected it, and it rejected Apple's surge in here. And so we see Apple is now trading under its non-moving average. And so it's trading under that non-moving average. It's definitely overbought, too much buying. We see momentum is dying. The trend is going down. So if anything, I'm more pessimistic on this one here. The trend is still intact. So don't get me wrong. It's still bullish. Doesn't mean that I want you to short it. But I'm expecting negative price action on this thing going into the near future. All right. What else we got? Anybody else taking a look at anything else? Just take a look at the sectors here. Consumer staples done its thing. And you can see a similar move here as well that occurred on that when we swung from that low to this high. and we got the 1618, and the price respected it. Okay, it got rejected right here. Now starting to climb down. Okay, it's clearly overbought. So the move here is over. This was the move. You should have got in when you got the trigger, ride it to the top, take the bag, scale out, all right, before it retraces and it reverts back to its mean. But that's how I'm looking on that. If there's risk in the market, we may see utilities. Let me see. Okay, so utilities is already rising, but utilities also getting rejected up here at this zone. We can see utilities is getting rejected. So nothing clear there. You know what? I forgot to actually cover the dollar with you guys. That looks like. All right, so there's a squeeze on the dollar, which is interesting. This is like a bullish setup on this dollar here, which, I mean, it's like it could be a flag, actually, a bull flag. And if that's the case, we could be seeing the dollar come up, at least breaking that record high back here, 97, a little over $97 there, up to $98. This squeeze, the reason I'm saying that is because we got this squeeze in here. So that could be a catalyst for that. We can see, previous squeezes in here, what occurred, squeeze back here. We say the squeeze back here. This one actually did fizzle out, but this squeeze came through. And then this squeeze right here definitely came through. And now we had another squeeze zone, and this is looking like a flag. All right. So you can see the formation. It's looking bullish. So that's interesting because if the dollar is bullish, then that's normally negative for equities, for stocks. So stocks should go down should a dollar advance further. All right. All right, gang. Anything else on the radar for anybody else in here? Let's see. Squeeze finder. We got a PANW, Palo Alto. This is a squeeze, but I don't really like it. It's stalling up at the 618. We can see that level here stalling out. It's in a squeeze, and so I don't think it's ready to pop though, but that's 50 is the floor. You got to see how it's going to hold. Don't have a clear signal on it, but it's in a squeeze. So it's something I just keep on the radar. It doesn't look like it's ready. I don't want to get in it right now. Don't have clear direction on it. I don't see nothing else here on my list here, but if that's all you guys got, just Apple. I mean, you already know what that looks like. Other than that, man, I think a couple other things to be aware of. I know we got China that's blacklisting some stocks. So, we'll see how that plays out. The Omicron variant situation, we'll see how that develops this week. I know the CDC and everybody's expecting this fallout to get worse as people, head into holidays and gathering and loving on each other and getting each other infected with the Omicron. We'll see how that plays out as well. But yeah, I think that'll just fuel them to invite the central planners to continue to, keep hampering the economy itself. All right. I saw that Princeton and Cornell, they're sending their students home for exams, and they're trying to go back online. My prayers go out to those who lost their people in the tornadoes. That was crazy. Never seen anything like that. And definitely dread tornadoes. But that was crazy. And it's sad that, people lost their life in that. Of course, the governments, they're going to use that as, ammunition to further this climate change agenda that they had. But, tell the government to stop messing with the weather, man. That's my message on that. Anyhow, you guys have a good night, man. We'll catch you in the markets this week. I'll be in the chat room. But if I don't see you guys in there, you enjoy your holiday week, and we'll catch you guys next time. Good night. Peace.